Hello and welcome to the program. Good morning, Nigeria. Welcome to Moneyline with Nancy. We apologize for starting a bit late due to some technical issues. Of course, this is Moneyline with Nancy, where we give you a deep insight on business, economy, and financial matters that affect your daily life. I am Nancy Nnaji. Did I say it earlier on? And we begin the show today with a headline that lit up economic space yesterday. Nigeria has now fully repaid the $3.4 billion emergency support it received from the International Monetary Fund under the Rapid Financing Instrument, commonly called the RFI. This facility was disbursed in April 2020. What you're seeing right now on the screen is a press release that was sent to us yesterday by the International Monetary Fund, and I'll come to that in a short while. This facility we're talking about was released to us in 2020 at the peak of the COVID-19 pandemic and the global oil price crash. When Nigeria's economy, of course, was in distress, the same with some other economies, the IMF responded quickly with this emergency financing to stabilize our reserves and provide the fiscal breathing room we desperately needed at that time, just like it did to other member countries. But here is where it gets interesting, because I've seen a lot of things in the news. Even though Nigeria has repaid the $3.4 billion in full as of April 30, 2025, according to the IMF says we're still obligated. It issued a press statement, a statement yesterday. That was the statement you saw earlier, clarifying that despite full payment, Nigeria remains obligated to continue paying about $30 million annually in what are called SDR charges. That's the special drawing right charges. Now, let me break this down for you. The rapid financing instrument that I mentioned earlier on is an emergency lending tool of the International Monetary Fund, IMF, structured to provide fast and flexible funding to countries facing sudden external shocks without the strict policy conditions typically attached to traditional IMF programs. You know, if you want to get an IMF loan like Ghana did, you will do a lot of things, a lot of conditionalities attached. Now to the SDRs, that's the special drawing rights. These are not currencies. Rather, they are reserve assets created by the IMF. This was created by the IMF in 1969 to supplement Nigeria's, member countries' official reserves. And they help countries boost liquidity and reduce reliance on hard currencies like the US dollar. To date, the IMF has allocated about $660.7 billion SDRs, equivalent to about $943 billion, and it's been allocated, that quantity has been allocated globally. Each country receives an allocation based on its IMF quota. In Nigeria's case, our SDR allocation is about $4.02 billion, roughly about $5 billion. But our actual holdings are $3.164 billion. That's about $4.3 billion. So this shortfall is what triggers annual charges based on the SDR interest rate. Until we close that gap between what we hold and what we've been allocated, then we can say that we are in the free, that is uhuru. But here's a very important point that needs to be said too. Nigeria is not heavily indebted to the IMF. If they are talking about debt, IMF no show face for our side. In fact, we hardly turn to the IMF for regular financing or structural adjustment programs, just like I mentioned before, like you had in Ghana, you've had with Greece, you have with some other countries that really faced economic distress. You'll recall, of course, that the perception of heavy indebtedness may come from historical experiences that we had. IMF imposed austerity in the 1980s and 1990s, which left, of course, deep scars in our national memory. But this recent loan was different. Like I mentioned earlier on, no harsh conditions, no long-term program, just a rapid emergency facility during a global crisis. Now, let me take you back to the bigger picture. While repaying the IMF loan is a positive step and a signal that, okay, that government is a bit responsible, Nigeria's broader debt burden still remains a major concern. And according to the Debt Management Office, as of December 2024, Nigeria's total public debt stands at 144.6 trillion naira. And if you dollarize that, that's about $94 billion according to the DMO as of December 2024. Of all of that, I'm zeroing in on the federal government. The federal government owes 62 trillion naira in external debt and 70.4 trillion naira in domestic debt. The states, 36 states, and the FCT owe the rest. And if we take a look at the categorization around those debts, you have the World Bank there, you have some bilateral loan, Japan, China, and all of that come into all of that. But we also owe another major Bretton Woods institution, which is the World Bank, about $17 billion, and that figure is still rising. We do a lot of more business with the World Bank under the IDA financing and the financing around reconstruction. But in the midst of all of this, one will say, what does it mean for the average Nigerian? For those of you watching this morning, or those of you that even saw the news yesterday, it was, of course, social media went crazy and all of that. Let me break it down for you also as a Nigerian. It means that despite the IMF repayment, the government's overall debt obligations are still very high, like I carefully explained before, and still has real implications. More pressure on the national budget, potential cuts to spending on health, education, or infrastructure, just like we're hearing. I did hear all of that from the Minister of Finance at the IMF spring meeting in just a couple of days ago. More pressure on government spending and potentially less room for social services, infrastructure, and economic relief. It also means that the government may continue to borrow to meet its obligations. I hope you understand what I've said, because, of course, I've said it times without number here. Looking at our benchmark oil price, we're already in deficit. Oil price is around 60, 61 US dollars. Our budget benchmark for this year is $75. So you see what I'm talking about. So yes, what we learned yesterday is a positive headline, but it doesn't mean that our debt story is over. So let's chill a little bit. And I'm telling the government, chill a little bit. So while the headlines celebrate a repayment, the real question is whether this will be matched with sustainable debt management, increased revenue generation, thank goodness that the tax bills have been passed now, and policies that translate into lower inflation for us all, job creation, and more economic opportunities, and a better quality of life for you and me, because that is what matters. So I hope I've been able to break down this highly technical issue and also tell governments to be a little bit more, I understand any small thing you celebrate, but if the bad news is now, you would pretend as if you are not seeing it, or you say the bad news is false. It's good to celebrate this, but our debt is rising. And our officials were even told in Washington, D.C. a couple of days ago, so I'm not even saying anything new. The Yorubas will say, pele pele, so let's use pele pele and do it. Let me speak my own language, just small ahead, the pidgin. So we'll be watching closely to see what comes next, like I mentioned earlier on.